Good evening. Harish, good evening. Lokesh, good evening. Yeah. I will analysis some more problems also. Already recorded problematic part, chapter 2. Every attempt, there is a problem. That's why we have to focus more on problem only. Good evening, Pawan. Ravi. Okay, guys. So late, we start with the day 2. Discussion. Karthik. Good evening. Good evening, Karthik. Today, chapter number 2, guys. Performance measurement and evaluation and improvement tools. Hope you guys, today my voice is clear compared to yesterday. There is some technical glitch in yesterday. Okay. So when it comes to chapter 2, guys, let us check in exam point of view. So on an average basis, they're asking 2 questions, guys. And the 2 questions, sometimes they will ask 2 theory questions. Sometimes they will ask 1 problematic question and 1 theory question. Yes. Okay. So when it comes to these are 2 productions we have. 2 theory questions or 1 practical question or 1 theory question. In old syllabus, this is the pattern they are followed. But when it come to new syllabus, guys, when it come to new syllabus, they're asking 1 theory question, 1 problematic question, 1 case study question. Be clear. 7 marks, 1 marks, 7 marks. On average from this chapter, you will get 21 marks. 21 marks. So the problematic question is very easy, as well as SPV. Let's check, man. The new mic I brought, mono. One theory question, 1 problematic question, and 1 case study based question. Okay. When it comes to theory question, we have a multiple concepts to learn for theory question. But when it comes to problematic question, we have only 2 concepts. For problematic question, we have only 2 concepts. When it comes to case study based, if you have a overall clarity regarding the entire chapter 2, then only you can answer the case study based question. Okay. When it comes to case study based question, sometimes they will ask for 7 marks in a question point of view. Sometimes they're asking MCQ point of view 10 marks. So they provide a case study paragraph, and that paragraph they will ask 5 questions, 5 twos are 10 marks. So this much of importance we have for this chapter. as well as in one attempt only from this chapter they asked 40 marks including MCQ. 40 marks. If only learn that attempt chapter 2, you are pass. Hope you guys clear. That is the importance of the chapter 2. Okay, when it comes to content concepts point of view, so let us check here. DuPont analysis, RONA analysis, case study based question. When it comes to theory point of view, you have to learn balance scorecard concept, benchmarking, bench trending, sigma and lean management, statistical quality control, MIS, enterprise resources planning, total productive maintenance, total quality management, data envelopment analysis. So these are the theoretical topics we have. Guys, clear? Okay, I increased the volume. Sai Teja. Let us check. When it come to first, we start with the problematic portion, guys. So when problematic portion, the first concept is a DuPont analysis. The first concept is what, guys? DuPont analysis. When it come to DuPont analysis, generally this is a US based company name. It is an US based company name, DuPont. So that company following one formula for calculation of return on equity. So as per ratio analysis, we already learned ratios in previous class. Return on equity equals to what, guys? EA/ESH divided by equity. This is a simple formula we are using for calculation of return on equity. But this DuPont analysis company, the DuPont company doing research, they're not focusing on direct formula. They're focusing on multiple ratios to calculate return on equity. That is the concept. So instead of single calculation part, they used multiple calculation for return on equity. So let us check. In return on equity point of view, they are used three components, three ratios. One is profit margin, another one is asset turnover ratio, another one is equity multiplier. Sir, how I calculate this profit margin? So profit margin is nothing but net income divided by sales into, how I calculate asset turnover ratio, sir? Sales divided by total assets. Sir, how I calculate equity multiplier? Total assets divided by equity. Hope you guys clear. So just understand the formula. I will give a subject clarity again. When it come to here, sales get cancelled, total asset will cancel. So what is the ultimate formula? Net income divided by equity. Net income divided by equity. Therefore, I already told so many times, net income is nothing but net profit. Net profit is nothing but PAT. PAT is nothing but EA/ESH. Why? Because if there is a no preference dividend, PAT is nothing but EA/ESH. So in a reality, there is a no preference share capital. That's why you can directly assume PAT is nothing but EA/ESH. Net profit is nothing but PAT. Net income is nothing but net profit. Guys, clear? Now, so this is a way to calculate a return on equity. But why they're focusing on three ratios means simple. Based on this ratio, they are analyzing their company profitability. Based on this ratio, they're analyzing their company profitability. They based on this ratio, they're analyzing their company activity. The company's activity. Based on this, they're calculating company's finance leverage. Company finance or leverage. So when it come to here, due to sales, how much profit company received, it explains. So profit margin explains what, sir? Due to sales, how much profit company earns. When it come to due to assets utilization, how much companies produces goods. When it come to here, with help of equity capital, how much total assets I purchased. How much total assets I purchased. So if you consider this, you get a three financial analysis. That's why instead of direct formula, they used these three ratios. Any doubt regarding this return on equity calculation, guys? If you have any doubts, please ask me. Please respond. If you have any doubt regarding this return on equity, three ratios? Hope you guys clear. Good, good. Okay, struggle, no sir. Yeah, Sujit, sales means net sales always. Lokesh, where you are stuck, man? Lokesh, we have a less time. Response clearly. Yeah. Apart from this, okay, good. Apart from this, in new syllabus, they used five components model. About discussion is called three component model. Now we have to we need to discuss about five component model. When it come to five component model, return on equity equals to operating profit margin into interest burden into tax burden into asset turnover ratio into equity multiplier. Let us check here also. Operating profit margin equals to EBIT divided by sales. EBIT divided by sales. It's saying that due to 1 rupee of sale, how much company earns operating, how much profit earned by a company with the operations. Next, interest burden. Next what, sir? Interest burden. EBT divided by EBIT. How to calculate interest burden? EBT divided by EBIT. So take an example to understand interest burden. Interest burden, EBT divided by EBIT, right? For example, EBIT equals to 100 rupees, EBT equals to 97 rupees. 97 rupees. Now interest burden equals to 97 divided by 100, right? Now the answer is 0.97%. Meaning for that 0.97% is, if company earns EBIT 1 rupee, on that 1 rupee 0.97 paise we earning with EBT, but there is a 0.03 is there na. This is called interest burden, or the pending percentage we have, that is called interest burden. So due to take another example to understand, EBIT equals to 100, EBT equals to 97. Now how we get interest? Generally EBIT minus interest, you will get EBT, right? Now EBIT 100, EBT 97. What is the interest portion? 3. Guys, clear? Next, when it come to tax burden, EAT divided by EBT. Same logic. Same logic. For example, EBT equals to 100 rupees. EAT equals to 60 rupees. 60 rupees. So you can know that EBT minus tax you will get EAT, right? Now EBT 100, EAT 60. What is the tax? 40. What's the tax, guys? 40. When you're calculating percentage point of view, tax burden equals to 60 divided by 100, that equivalent to 0.6. For every 1 rupee earning of EBT, we are paying 0.4 paise of tax. We are netly enjoying 0.6 paise. Guys, clear? So with only one ratio, we are assessing lot of parameters or indicators. Next, after that, common asset turnover ratio. Sales divided by total assets. Equity multiplier, total assets divided by equity. Let us check here. EBAT get cancelled. EBT get cancelled. Sales get cancelled. Total assets get cancelled. The ultimate pending values are EAT divided by equity. I already told EAT is nothing but EAESH. PAT is nothing but EAT divided by equity. Hope you guys 5 component model also clear. If any doubt regarding 5 components model, please ask me. 5 component model. Five components model. Good, Sujit. Okay, Sujit. So I will share these notes also in our group, sir. If you have any doubts, you can cross check with the notes also. So without late, we start with the calculation part. Thank you, Chinni. Yeah, come to illustration number 1. Answer all 3 questions using the DuPont identity. So company case here regarding to company name Wilson has an equity multiplier 1.3, total assets turnover 2.1, profit margin of 5.2%. What is its return on equity? So what are the given values? Equity multiplier 1.35, asset turnover ratio 2.1, profit margin 5.2%. It means 0.052. Now we know return on equity as per DuPont analysis, profit margin into asset turnover ratio into equity multiplier. So profit margin, please, 0.052 into asset turnover ratio 2.1 into 1.35. Now the answer is 0.52 into 2.1 into 1.35. So 0.1638. You can write like this also, 16.38%. 16.38%. Sorry guys, I think answer is wrong. All wrong, calculation mistake. 14.74% or 0.147. Okay, next. Case B, company has Sinovic company has debt equity ratio 0.7, Return on asset is 8.4%. Total equity 8,40,000. What is the equity multiplier? Return on equity, net income. They are asking for 3 questions. Equity multiplier, return on equity, net income based on given information. Let us check. Given information, debt equity equals to 0.7. Return on assets 8.4% means 0.084. Equity 8,40,000 rupees. They need equity multiplier. They need return on equity. They need a net profit margin. Not net profit margin, net income. Okay. Now, here you have to understand the new calculation part for equity multiplier. Equity multiplier equals to what you know? Total assets divided by equity. Total assets divided by equity. What's the meaning of this? For how much equity capital company used for purchase of total assets? How much equity capital used by a company for purchase of total assets? Okay. Now, if I know total assets and equity, I can easily calculate equity multiplier. But you can observe here, there is a no total assets, there is a no equity. I can't find out equity multiplier. So even though I can't find out, something you have to learn for calculation. For the calculation, observe what I am doing. Therefore, total assets equals to equity plus debt. Equity plus what, guys? Debt. Now, equity multiplier equals to equity plus debt divided by equity. Equity plus debt divided by equity. Now, if you take a common equity, 1 plus debt divided by equity. 1 plus debt divided by equity. Now, this formula is look like a ratio name. Ratio name. What is the ratio name? 1 plus debt to equity ratio. Debt to equity ratio. This is called equity multiplier. Guys, is a new point, guys. So generally, equity multiplier equals to total assets divided by equity. If it is not possible, we can use alternative calculation, that is called 1 plus debt equity ratio. I think in this problem they provided debt equity ratio 0.7. Now what is the equity multiplier? Equity multiplier equals to 1 plus 0.7, that equivalent to 1.7. Any doubt regarding this alternative calculation of equity multiplier? Alternative calculation of equity multiplier. Next, second case, return on equity calculation. Generally, we are using direct formula called EAESH divided by equity. It's not possible. That's why alternative 3 components or 5 components. 3 components also there is no sufficient information. 5 components also there is no sufficient information. Based on availability of information only, you have to figure out return on equity. So I have return on asset. I have return on asset. I already calculated equity multiplier. You can observe how I get a return on assets. Net income divided by total assets. Equity multiplier equals to total assets divided by equity. Karthik asking a question, why are you using 1 plus debt equity ratio? You can observe, man. So this is the equity multiplier formula. I don't have this total asset information. I don't have this equity information. even though they're asking means there is something subject is there now. The subject is called how to calculate total assets equity plus debt now. So I'm elaborating the formula. Instead of total assets I used equity plus debt. So now if you take equity common, it's like a 1 plus debt by equity. Now equity multiplier equals to, this is the form of ratio na, 1 plus debt equity ratio. So that is the reason for set alternative formula. There is a no sufficient information. If you have a sufficient information, you can directly calculate like this. Karthik, so clear? Now when it comes to case 2 return on equity also, I don't have a 3 components information, I don't have a 5 components information, I don't have a direct information. The availability of information is return on assets as well as equity multiplier. So return on assets, net income divided by assets. Assets that cancel, you will get net income divided by equity. It means you can also use alternative calculation for return on equity is return on assets into equity multiplier. So this also be alternative calculation. Now let us check here. Return on asset directly given 0.084. Equity multiplier I calculated 1.7. Now the answer is 0.8 into 1. So 14.28%. Next, net income. This all are in case 2 only, guys. Net income. So direct formula, return on equity equals to net income divided by equity. Net income divided by equity. Now I want this net income. If you if you shuffle the formula, you will get net income. So net income equals to return on equity into equity. So return on equity we already calculated here, 0.1428 into equity is there 8,40,000. Now the net income equals to 14.28 into 8,40,000, 1,19,952. Any doubt regarding this case 2, guys? If there is a no sufficient information means problem is not as a student we are not do well. So there is a understandable concepts is there. If you use understandable concepts, you can create the formula. So you can observe this this formula. Generally I told in the classroom we are using 3 components, or we are using 5 components, or we are using direct formula. But based on information here, you can observe the net income divided by equity also possible. The ultimate thing is formula need to be proved with help of different analogs, different methodologies. Y3K INC has a sales of rupees 3,100, total assets 1340, debt equity ratio 1.2. Its return on equity is 15%. What its net income? Now we can easily find out. Case C, given information, sales rupees 3,100, total assets rupees 1340, debt equity ratio 1.2, return on equity 15%. You can write like this 0.15. Now they need net income. Easy. So what is the formula? Return on equity equals to net income divided by sales. Asset turnover ratio, sales divided by total assets into equity multiplier. total assets divided by equity. Okay, but net income is a question mark. We have to figure out. I know return on equity, I know sales, I know sales, I know total assets, I know total assets. I don't know equity. I don't know equity. That means this calculation is not possible. That's why I'm using alternative. Now I have a first write down properly. Return on equity equals to profit margin into asset turnover ratio into uh, equity multiplier. Now profit margin, net income divided by sales. Asset turnover ratio, directly write the answer. Sales divided by total assets. 3100 divided by 1340. So 2.313 is asset turnover ratio. So there is a no direct calculation of total assets divided by equity, but there is an alternative calculation. 1 plus debt equity ratio equals to equity multiplier. So equity multiplier equals to 1 plus 1.2. That is nothing but 2.2 is the equity multiplier. 0.2. Now return on equity 0.15. Net income I don't know. Sales I know. 3100 into 2.313 into 2.2. So if you solve this, you will get a net income answer. The net income equals to 91 point. Any doubt regarding this case C? Case C. It's clear? Please respond, guys. Clear? When it come to next question number 2. Question number 2. Mr. Hardik Kankara is planning to take over the business of Artex LLP. For the purpose of Mr. Hardik appoints you to analyze the profitability of Artex LLP for the period ended 31st March 2022. The following balances are extracted from statement of profit and loss and balance sheet of Artex LLP. The year ended 31st March 2022. You are requested to make a 5 component DuPont analysis and summarize the data along with your observations for Mr. Hardik. Sir, if you ask this kind of question, calculation is not a important, sir. You can observe. Summarize the data along with your observation. If you need to write what happening that calculation in a theoretical format. If you are not writing the observations, you don't get full marks. So calculation as well as observation only you will get a good and full marks. Okay. Next, sales is given. Depreciation, interest expenses, tax expenses, net income, current assets, fixed assets, total assets, current liabilities, long-term debt, shareholders equity, total liability and shareholders equity. Okay. Now 5 components means first write down the formula properly. Return on equity as per 5 component model. Operating profit margin, interest burden, tax burden, asset turnover ratio, equity multiplier. Now net income divided by sales, EBT divided by EBIT, ELT divided by EBT, sales divided by total assets divided by equity. So So procure the information now. Information. Sales rupees 17,750. Net income rupees 4,125. Interest expenses 50. Tax expenses 2,250. Total assets 18,125. Just equity 10,250. So this is the information they provided. They provided a lot of information, but the required information is this. Now first, net income directly given 4,125 divided by sales also directly given 17,750. 4,125 divided by 17,750. 0.232. Next calculation, EBT divided by EBIT. EBT divided by EBIT. So EBT equals to PAT plus tax. PAT plus tax. What's the PAT? PAT is nothing but net income. 4,125 plus tax 2,250. Now what is the EBT? 4,125 plus 2250. 6,375. EBIT equals to EBT plus interest. We already calculated EBT 6375 plus interest expenses 50. Now EBIT equals to 6425. Please calculate here. EBT 6375 divided by 6425. The answer 6375 divided by 6425. 0.992. So interest burden is not much more in the company. Why? Because if it is a much more, your answer is 70% or 60% or 50% like that. If your answer is 0.99 means for every 1 rupee of operating profit, you are paying 0.01% of interest. So you are earning 0.992 of EBT. That's why interest burden is minimum to the company. Next, EBT not EBT, EAT divided by EBT. So EAT is nothing but net income 4,125. EBT I calculated here 6375. 4125 divided by 6375. So 0.647 is the answer. There is a 36% of tax burden to the company. 64% is the after taxable profit. The taxable profit is 6375. After tax profit is 4125. It means company have a tax burden of 36%. 36%. Next, what's the next one? Sales divided by total assets. 17,750 divided by 18,125. 17,750 divided by 18,120. 0.97. Go with 0.98. 979, go with the 0.98, no issue. The word 0.98 means for every 1 rupee of asset generating 0.98 rupees of sales. It is called underutilization. At least you have to earn 1 rupee of sales. Why? Because we are using 1 rupee in investment, but we are operationally doing the sales 0.98 only. Next, equity multiplier. Total assets 18,125 divided by equity 10,250. Now 18,125 divided by 10,250. 1.768. So in assets investment, we are using 1 rupee equity. Apart from the 1 rupee equity, 0.768 is there. That 0.768 is a debt portion. So here 1 rupee we are using only equity, only 0.7 paise we are using debt. It means company fully rely on equity only. Now let us calculate return on equity. 0.232 into 0.992 into 0.647 into 0.98 into 1.678. 0.232 into 0.992 into 0.47 into 0.98 into 1.76. So what is the answer, guys? Please calculate, tell me. %25.96%. Yeah. So if you calculate this, you will not get a good marks, guys. After calculation, you have to write this like this. Next point, high return on equity, that is 25.96%. Mean generating strong returns to its equity shareholder. Second one, operating efficiency, that equivalent to 23.2%. %23.2%. It also good sign to company. Third point, low debt usage. Because low debt usage because interest burden is less. Interest burden is less. Why interest burden is less? They are not rely on debt capital. That's why they're paying less interest. Fourth point, efficient usage of total assets. That is, asset turnover ratio equals to 0.98. For you are investing 1 rupee, you are generating nearly 1 rupee. That's why efficient usage of total assets. Fifth point. Equity multiplier. What's the answer for equity multiplier? 1.68. 1.768. Company rely on more on equity, less on debt. And the sixth point, company facing tax burden. Company facing tax burden. So these are the observations I figure out that. If you write these observations, then you can get a good marks. Guys, clear? Sujit, Lokesh, Ravi, Harish, Karthik. Yes. When it come to illustration number 3, the same to above discussion. I'm not explaining here. 5 component model, they used a 3 component model also. So you can observe the observations. So which EBIT divided by sales, which measures the operational efficiency, is satisfactory at 36.20%. This answers for this calculation, guys. Problem number 3. Same kind of calculation. Sujit, questions not came from our materials, but models. If you understand the models, you can easily crack what kind of questions they ask. All models I covered. Just listen and understand the concept. Next, EBT and EBIT are almost same. 0.99 means there is a minimal interest burden. The tax burden is significant. Why? Because the answer is 64.71%. The answer 64.71% means 35.29% is a tax burden. Assets are managed effectively. Why? Because asset ratio is 0.97, so near to 1 rupee. So equity multiplier 1.77 indicates that firm depend primarily of equity. So you after calculation you need to write these observations also. Okay. Next, when it come to illustration number 4. So in a return on equity, in this calculation part, only issue is they're asking questions are very lengthy questions, guys. But if you procure what information you required, that is sufficient and much more enough. So when it come to here, see here, you are required to use a suitable DuPont analysis using financial data given below. Show how return on equity of the company is changing due to its margins, asset utilization, leverage over a period of 2 years. Don't misunderstand the word leverage. Here leverage means risk of the company. Okay. So you are also required to give your comment on the change in this parameter. They provided 2 years information. They're asking DuPont analysis concept, return on equity calculation. Direct go unless they specify. If they ask return on equity, you have to use a 3 component model only. If they specifically mentioned I want 5 component model, then only you have to write that 5 component model concept. Once again, if they specify only 5 component model, if there is a no specification, there is a no clarity, you go with the 3 component model only. Now see, don't check this entire information is not required. And also here also you have to focus only what the information is required. Now see, first ratio is net profit ratio or operating profit margin. So what is the formula? Net profit after tax divided by net sales. So directly go and procure the net profit after tax and net sales. You can see profit after tax is nothing but net income. There is no preference share capital, that's why it is known as EAESH. Anyway, it is a net income. Directly take 1123.96, 1507.11. Next, divided by sales rate. Total revenue is nothing but sales, guys. Sometimes they will give us sales returns. If they give sales returns, you have to reduce sales returns from sales. Net sales you have to consider. 7125.8, 8431.55. If you calculate, you will get an answer. 1123.96 divided by 7125.8. One one two 3.96 divided by 7125.8, 0.158, 1507.11 divided by 843155, 0.178, not 8, go with the 9, round off 9. First is can go for the comp. No, Ravi, they will specify the 5-component model introduced in our new material, Ravi. That's why if they ask only, we are showing that calculation. If they are not asked, you go with the 3-component model. So your intention is I understand. So if there is a there is a no tax information, there is a no interest information. Yes, obviously, if there is a no, this two means we are using 3 components only, na. So I am saying that even though there is a interest and tax, they're not specified with the 5 component, go with the 3 component. Okay. Next, asset turnover ratio, sales divided by total assets. You can observe here, where is the total assets? Here is another note point. If the total assets include fictitious assets, you have to reduce that fictitious assets. Sales we already calculated. You can take directly. So 7794.93 here with the same value. The answer is 0.914, 0.833. Next, asset to equity ratio. There is nothing but equity multiplier. So we already taken total assets value. Now if you know the equity, then you can easily answer. Now equity is also have a different names, guys. Equity is also being known as net assets, is also being known as proprietary fund, is also being known as net worth, is also being known as book value. It's also being known as book value. This kind of names they will give. So directly you can take 7550.28, 8869.52. Sir, they provided directly net worth. No, we are taken. If there is not provided directly, how I calculate, sir? So if they're not provided directly, you have to add share capital plus reserves and surpluses. Share capital plus reserves and surpluses. If you solve this, you will get an answer 1.032, 1.141. Now, non-equity equals to 0.158 into 0.914 into 1.032. So 14.88%. 14.88%. Next, 0.179 into 0.833 into 1.141 equals to, so 16.98%. So comment. The return on equity has increased 2022 from 14.88% to 16.98%. And the main reason for the increasing are margin and leverage, which have increased, but due to lower assets utilization, return on equity has not increased by its full potential. You can observe net profit increases, asset utilization decreases, asset equity multiplier also increases. So due to this increase, our return on equity increased. Okay. Due to this utilization, our increasing of return on equity is not that much. If here also increases, our return on equity also increase, more potential. If the company concentrate on the better utilization of the assets, its return on equity will further improve. So calculation and this comment, you will get a 7 marks. Next, here also they provided. So it is for 2 years calculation. It is for 4 years calculation and comparison. Same calculation part for 4 years. For 4 years, you have to compare. Compare, you have to write the comment. All of you, are you understand the concept of return on equity as per DuPont analysis? You have any doubts? Ask me now. So this is another different model we have. Yeah, intangible assets also be a part of the total assets, Sujit. Only fictitious assets are not part of the total assets. Now illustration number 6. River limited are provided below. Revenue, assets, equity multiplier, return on equity, percentage. Comment on change in profit margin, asset efficiency, leverage, return of asset, return on equity. Okay, let us solve this. Profit margin. Return on equity equals to profit margin into asset turnover ratio into equity multiplier. Now profit margin equals to asset turnover ratio for 21, 4,800 divided by 2,000. Asset turnover ratio for 2022. 1,200 divided by 2,400. 2.58. Now 2021 calculation. What's the return on equity? 0.2667 equals to, I don't know profit margin, but I know asset turnover ratio 2.4. I know equity multiplier 1.33. 2.4 into 1.33. 3.192. 4 into 1.3. 3.192. 0.2667. So profit margin equals to 0.2667 divided by 3.192 into 100, you will get a percentage. 0.2. divided by 0.192 into 100. 8.36%. Next, you have to calculate for 2022. When it comes to 2022, 0.25 return on equity equals to, I don't know profit margin, I know asset turnover ratio 2.58, equity multiplier 1.2. Now profit margin equals to 0.58 to 1.2, 3.096, 0.25. So profit margin equals to 0.25 divided by 3.096. 200, you will get a profit percentage. 0.25 divided by 0.096. 200. 8.07%. Okay. Profit margin completed. Asset efficiency. Asset efficiency. Asset efficiency we can say with help of this. Leverages we can say with help of this too. Return on assets we have to figure out now. Return on assets for 2021. So how to calculate return on assets? Net income divided by total assets. I don't have net income. I don't have total assets. I have total assets, but I don't have net income, right? So that's why I'm using alternative formula, return on equity divided by equity multiplier. So you can observe how to calculate return on equity, net income divided by sales divided by equity multiplier equals to, net income divided by equity, return on equity. Now how to calculate equity multiplier? Total assets divided by equity. Now equity get cancelled. You also have a formula, net income divided by total assets. So here this is the direct formula, and you can also use the alternative, return on equity divided by equity multiplier. Now see, return on assets 21. What's the return on equity? 26.27. 0.2667 divided by equity multiplier 1.33 into 100. 0.26 divided by 1.3, 200, 20%. Return on assets 2022. Return on equity 25%. Equity multiplier 1.2. Divided by 0.2 into 100. 20.83%. So all completed. So return on equity they are already given. Now we have to construct a table called summary, particulars 2021, 2022 change. First, profit margin we already calculated here, 8.36%, 8.07%, 8.36%, 8.07%. What happened? decreases slightly, not much more decrease, it's a small change in decrease. Next, asset turnover ratio 2.4, 2.58, 2.4, 2.58. Increases, increases means effectively utilizing. Next, equity multiplier 1.33, 1.2, 1.33, 1.2. Lower leverage. Why lower leverage? We are more depending on equity. I already told. After one, what are the percentages you have? That is a debt portion. 1.33 here, 1.2. 0.332, 0.2 decreases. Debt portion decreases means risk also decreases. That is called leverage. Next, return on equity 26.67%, 25%. 26.67%, 25%. Decreased. Return on assets 20%, 20.83%. Increased. So for this problem, you have to show this summary, guys. Clear? So this is a problematic portion we have, guys. Remaining problems are not important for exam point of view. Next, I start with theoretical concepts. So there is another concept is called RONA analysis. The word RONA analysis means return on net assets. So net profit divided by net assets. So only thing you have to learn calculation of net assets. Net profit is nothing but PAT. That is nothing but EAESH. You already know. But when it comes to net assets, we have two types of calculation. We can use a balance sheet asset side calculation part. We can also use a liability side calculation. So in asset side point of view, total assets minus external liability. The word external liability means long-term debt and current debt. So there is another alternative, total assets plus net working capital. Total assets plus net working capital. Next, there is another alternative calculation, equity share capital plus retained earnings plus preference share capital minus fictitious assets. So these are the three alternative calculations we have. So based on information, you can pick that formula. So if you know this net assets calculation, you can easily calculate RONA. Don't confuse the word if they provide RONA. RONA means return on net assets. Return on net assets. Okay. Next, when it comes to theory point of view, guys. This is a category concept. This also A category concept. This is a category concept. This is a category concept. And this is called A category concept. Okay. I will give a clarity only for these concepts, guys. Now, when it comes to balance scorecard, it's a simple concept, guys. It's a simple concept. So what is that simple concept regarding to balance scorecard means? Every organization only focusing on money terms, guys. Only focusing on what? Monetary value point of view. So companies are thinking that if my company earns huge profits, it is sufficient to handle entire company. So it is a yes, what they're thinking thinking version is right, but it is right for small organizations like sole proprietorships, etc. But when it comes to MNC point of view, if you focus only on monetary values, that is not a good sign for your company growth. Are you clear? That's why every company are focusing on multiple things for knowing the entire organization point of view. for the purpose in this balance scorecard. The word itself saying that balance scorecard, balancing the entire organization with help of four aspects. Four aspects that is called perspectives of balance scorecard. So organization not only focusing on financial aspects but also focusing on learn and growth of the company, learn and customer satisfaction, internal controls. By this like four pillars of the organization, if you balancing these four pillars, automatically your organization will be grow. Automatically your organization will be grow. Hope you guys clear. So here the word balance scorecard means we're using four pillars to protect our organization. What are the four pillars, guys? One is financial pillar, another one is a learn and growth pillar, another one is internal control pillar, another one is a customer satisfaction, customer perspective. Hope you guys clear. If company focusing on these four pillars, automatically company will grow. So that is the soul of the balance scorecard concept. Let us check here. Introduction is not required. You can come to meaning of the balance scorecard. When it comes to meaning of the balance scorecard is nothing but performance evaluation tool. So what are the concepts we are learning in this chapter 2? All are tools, guys. All are tools. In chapter number 1, we understand, we have studied problems in the organization and also solutions also. For the solutions, we are not using tools on that. So this is a problem, how to solve. This is the learning objective of the chapter 1. When it comes to chapter 2, for that problem, this is the tool you are used for answer. So these all are tools. If you implement these tools in your organization, it is a good sign to grow your company. Okay. Now it come to here, tool that help executives, that is nothing but top level management, achieve the organization's mission and overall strategy. Let us check. Traditionally, companies have judged their health. Health means not our health, guys. Company health. Health means financial position of the company. Health means what, guys? Financial position of the company. Now, how much money they make, but it give you part of the picture. If they come traditionally means outdated. If they're focusing only on money point of view, it provide only part of the picture. If you know the total picture, then only you can take a good decisions. Now, balance scorecard is a management tool. It helps companies to access overall performance. The word overall means total, 360 degrees. Balance scorecard refers to a model provided a suitable balance between short and long-term objectives with financial and non-financial and internal and external performance. It focusing on total overview, total view, with total view. Yeah, Sujit, this is sufficient. There is another problematic portion is there, pie chart and C chart calculation. If time permits, I will explain at the time of statistical quality control discussion time. Okay. And also there is a total quality control related problem is there. That problem also important. Only a few or three problems I missed here. I will explain later with after completion of the concept. If you thorough with that return on equity and these problems, that is sufficient from this chapter. Okay. Next, when it comes to four perspectives of balance scorecard. So what is the first perspective? Learning and growth. Learning and growth. Next, internal process. Next, financial aspects. Next, consumer is nothing but customer. Let us check in learning and growth point of view. So it focus on ability of employees and quality of the information system and organization support to achieve organization goals. Simple, guys. When it comes to your company, so taking a reality example. Nowadays, I will explain, Sujit. Nowadays, AI tool replacing lot of softwares, right? So in every organization, if company providing a AI coaching or AI knowledge to their employees, automatically their knowledge and skill will be increased. They will use that skill and knowledge for our organization. Automatically, our company will be grow. It means if you start a company, you can treat your employees like your own persons. If you treat them like own, you have to give a knowledge to them. They will work for you. That is the meaning, that is the importance of learning and growth point of view. Next, when it comes to financial point of view, it's all about profits, guys. It focus on the profit of the organization, like operating profit, return on investment, economic value added, cost to reduction, and asset utilization. Next, when it comes to internal process. Yeah, Karthik, that is sufficient, Karthik. So this is sufficient to write like this. So these are points I consider from suggested answers, as well as simplified language in Google. I used all tools for simplifying this. This is a sufficient to write in exam. You can easily understand, you can easily write. Okay, but don't simplify these sentences. This already simplified sentences. If you simplify this, automatically marks also simplify. Okay. Next, internal processes. When it comes to internal processes, it focuses on the internal business results that lead to financial success and a satisfied customer. So internal about it talks about a hierarchy of the company. So you have to flow information from lower to upper, upper to lower easily. Then you can companies are go with a good customer satisfaction. Okay, if don't know the higher authority about what happening in the operation level, they can't take a right decisions. They can't take a right decision. Every company need to coordinate all hierarchy levels in for success of the company. Next, when it comes to customer satisfaction, lot of times I learned customer is the king of business. Customer is the backbone of the business. So if you providing satisfaction to customer with help of a quality product and time to time delivery, automatically he will customer will be retained for your company only. So if you have a loyal customer base, you can easily crack the you can reduce the competition. It focuses on the ability of the organization to provide quality goods and services, the effectiveness of their delivery, and customer satisfaction. So these are the four perspectives of balance scorecard. Okay. Next. So I provided here exam point of view presentation. So this is exam point of view presentation. The balance scorecard is a strategic management tool developed by a Robert Kalpan and a David Norton. You have to mention these two persons' name, guys. So they're asked multiple times as MCQ. Robert Kaplan, and David Norton. It looks at a business from four key perspectives, ensuring a comprehensive view of an organization, comprehensive view. So the word comprehensive means overall organizational performance behind just financials. Okay. Now, financial perspective. It focusing on how do we look to shareholders, key metrics, how to check profitability, return on investment, revenue, growth, cost management. Goal, measure whether the company's strength contribute to the bottom line. So profitability is there or not. So customer perspective, it focusing on how do customers see us, for checking for that matrix, customer satisfaction, retention, acquisition, market share. Goal, understand how well the company is serving its customers and meeting their needs. So internal business process and learning and growth, you can check. You already know this. When it come to another important question in balance scorecard, so they will ask a question like this: what is meant by balance scorecard and benefits of the balance scorecard? So you already know the balance scorecard concept. Now when it come to benefits of the balance scorecard, so first benefit is better strategic planning. So the word strategic means long term. You can use a word like that also. Better long term planning for powerful framework. If you add just words, better strategic planning for powerful framework, if it's sentence completed. Next, better management information. So because of we are focusing on four aspects now, information, yeah, surrounding all aspects, you can take a best decision. That is a help organization designed by the best key performance indicators. Next, better organizational alignment. So we can coordinate with all departments, align their organization structure to the objective. So they are all run work with only for a single objective. Next, better process alignment. Create a strategy for focused organization. Better alignment for projects and initiatives. It helps organization map their projects. Improved performance reporting, improved strategy or communication and execution. Simply one page picture for all prospectives point of view. These are the benefits we have, guys. So very, very important. So question, what is meant by balance scorecard and its benefits are like this. What is meant by balance scorecard and its perspectives and limitations of the balance scorecard. So when it comes to limitations of the balance scorecard, there is a no relation between balance scorecard and shareholders value. Why? Because shareholders value is linked to only profits, not about learn and growth, not about internal process, not about customers. So that is a disadvantage. It does not lead to single aggregate summary of a control. So focus on only single thing is not that much of easy, but balance code saying that you have to focus on four things. That is not that much of easy what they say in textbook. That is another disadvantage. It gives a conflict signals and confuse management. Why? Because four things, four management, four different views. That is a confusion. Another disadvantage. It involves substantial shifts in corporate culture. Substantial means a large. So these are the disadvantages and limitations of balance scorecard. Next, when it comes to steps in developing balance scorecard for implementing the balance scorecard in an organization, these are the steps you have to follow. So just I'm explaining about the steps, sir. You can go with a theory content. First, assessment. The word assessment means first consider this balance scorecard is required for our organization or not. Next, create a strategy, and strategy will relating to check with strategies relating to objective or not. That is called strategic objective. Next, you have to link all things in one format. That is called strategy mapping. Next, you have to measure that implementation is going good or not. That is called performance measurement. Next, strategic initiatives. If any is not works well, you can take another strategies to doing well. Next, performance analysis. Next, alignment. Next, evaluation. So these are the steps we are following in balance scorecard. So this also be important question because entire balance scorecard concept is a category concept. Hope you guys clear. For this attempt, in my guest list, balance scorecard is the topic. The first topic. There is a probability for a theory question is balance scorecard only. Guys, clear? Next, benchmarking. What is our next concept? Benchmarking. So the word benchmarking means standard. The word benchmarking means what, guys? Standard. We are setting our organization standard based on outside persons or inside persons is called benchmarking. We are setting a target with help of with help of our information as well as outside information. That is called benchmarking. Let us check here. The practice of setting targets using external information is known as benchmarking. Not only external information but also internal, guys. Not only external but also internal. Why? Because there is an internal benchmarking concept is also there. Next, it will be necessary to note that benchmarking exercise is based on best practices, not on best performance. Benchmarking focusing on which companies are doing best practices, not best performances. They are for setting a target, we are not focusing on the best performances, we are focusing on the best practices doing in the market. MCQ also, guys. So benchmarking focusing on best practices, not best performances. Next important one, types of benchmarking. So here benchmarking classified into two types: nature of the business point of view, practices and processes point of view. In nature of business point of view, we have a few benchmarking list: internal benchmarking, competitive benchmarking, industry benchmarking, generic benchmarking. When it comes to process point of view, product benchmarking, process benchmarking, performance benchmarking, strategic benchmarking. Okay, let us check internal benchmarking. Setting a target based on comparison are made between various departments within the same organization. That kind of standards is known as internal benchmarking. Next, setting a target based on comparison are made with direct competitor. The words are very, very important. Within the same organization with a direct competitor. That is called competitive benchmarking. Next, when it comes to industry benchmarking, setting a target based on benchmarking partner is not a direct competitor, but does share the same industry as one's organization. For example, in cement industry, we have a lot of companies is there. Bharati Cement, Sakti Cements, etc. etc. Cement companies are there. Individually known as companies, total aggregately known as industry. If that Bharati Cement put a target based on industry, that is called industry benchmarking. Next, generic benchmarking. What's the next one, guys? Generic benchmarking. So setting a target based on unrelated businesses, process, or functions that can be practiced in the same or similar ways regardless of the industry. So setting a target based on unrelated businesses is known as generic benchmarking. Generic benchmarking. Next, product benchmarking. Setting a target based on its rivalry products and break down the find out how features and performance, etc. This also be known as reverse engineering. So, for example, I started one cool drink manufacturing. My competitor is Cam Cola. So I purchased that Cam Cola bottle. I split. I done a post-mortem analysis on that. What kind of ingredients they're used, what kind of a structure bottles they're using. This kind of analysis we done. Based on that, I set a target that is called product benchmarking. Is also be known as reverse engineering. It's also be known as what, guys? Reverse engineering. Next, process benchmarking. Process benchmarking. Setting a target based on comparing and analyzing the business processes in above product, here processes of an organization within the process that are considered the best practices in the industry. That is called process benchmarking. If you set a target based on product, competitor product, that is called product benchmarking. If you set a target based on competitor process, is called process benchmarking. Performance benchmarking. Setting a target based on gathering and comparing the qualitative data. So if you set a target based on quantitative, not qualitative, quantitative data, it is called performance benchmarking. Next, strategic benchmarking. Setting a target based on comparing improvements in the strategic performance. If you are setting a targets of your long-term planning with help of other company long-term planning, that is called strategic benchmarking. So these are the types of benchmarking we have, guys. So there is a direct question. They will ask like this. What is meant by benchmarking? List out the types of benchmarking. List out the types of benchmarking. Next. So process of benchmarking is not that much of important, and bench running also not that much of important for exam point of view. Next, when it comes to Six Sigma. Next, when it comes to what, guys? Six Sigma. Yeah. The word Six Sigma is a tool we are using in our manufacturing organization to reduce defectives. To reduce defectives. To reduce defectives. Let us check here. So what is Six Sigma? A quality improvement program that improve customer experience, reduce cost, build better lenders, also be known as operational excellence, zero defects or customer perfection. It uses data to eliminate defects in any process. So it uses the data to eliminate defects in any process. For reducing the defects and providing a quality good to customer, we are implementing tool name called Six Sigma. Six Sigma. Okay. Now, so there is a two methods we are using in Six Sigma concept. So one is DMAIC and DMADV. So this is for existing companies. This is for new companies. So many times this question asked, sir, or explain methods of Six Sigma. Explain methods of Six Sigma. So when it comes to methods, steps in method 1, DMAIC. The word D means define. Set a goal that match customer needs and compare strategy. M means measure. What you set the target, you have to measure. Gather the data on the current process. Next, you have to analyze. You have to analyze. Analyze means understand what causes problems in the process. After analyze, you have to improve that problem. So make a changes based on the analysis to fix the problems. After that, control. Keep the process stable and avoid future problems. This is called DMAIC. Next, steps in DMA-DV. It is for new organization. So D means define, set a goal for the new designs. New designs. Measure means identify what customers want and assess the risk on that customer need. Next, analyze. Create and evaluate the design options. Design. Finalize and test the best designs. Verify. Run, test, start production and hand it over to the operations. So this all points talks in a new company point of view. This all talks about existing company point of view. So these are the methods of DMAIC and DMA-DV. Guys, clear? Next, another important concept, 7 key roles for successful Six Sigma development. 7 key roles for successful Six Sigma development. So it's like a karate, black belt, blue belt, white belt, that kind of information is there. It's not a karate belt, sir. This is the persons or key personals um, involved in a Six Sigma process. The first first person are called executives. They are also be known as top level leaders. Their work is providing a strategic direction for Six Sigma. Align Six Sigma goals with the company's culture and objectives. That are the task of executives. After executives, there is a person's name called champions. Champions. So middle level leadership. So understand what their work is. Champions work is understand the company's mission, vision and challenges. Customize the Six Sigma plan to fit the company. Executive only told we are implementing Six Sigma. Champions are creating a plan for that. Remove obstacles during the implementation. Next, another team name called Master Black Belt. So they're also been known as expert level coach. Expert level coach. They train and mentor the black belts. Master are creating a new persons. The new person name is called black belts. Help with the project selection and strategy and can certify others in a Six Sigma methods. Next, the person black belt. This black belts persons trained by master black belts. Full-time professionals managing major Six Sigma projects. The persons who directly engaging with the Six Sigma is known as a black belt. There is known as project leaders. Lead team and apply Six Sigma tools like DMAC, DMA-DV. I already told now they're directly involving in the Six Sigma process. Deliver high savings and complete multiple projects per year. Next, green belt. This green belt team project assistant and leader for a small task. Now, part-time Six Sigma professionals help black belts and lead smaller projects. They are doing green belt holders are doing small projects. They help to the black belts. Focus on the collecting data, testing and analysis. After green belt, there is another team name called yellow belt. Team member with basic knowledge. They how much knowledge we have regarding Six Sigma, they also have same knowledge. That's why basic knowledge they know the basics of Sigma, support green and black belt, often subject matter experts and run smaller improvement task. Next, the last team is called white belt. They are the beginner level, have a basic awareness of the Six Sigma components, help in a small ways and solve a local issues, and a starting point for a deeper Six Sigma involvement. If you want to implement Six Sigma, you have to use this team. So executive levels, champions, master black belt, green belt, yellow belt, white belt. If you don't know this team, you can't implement Six Sigma process in your organization. Clear? So this also very important concept. Six Sigma versus TQM. The difference between Six Sigma and TQM. There is a no much more differences. They both are used for reducing the defects and wastage. Are you clear? There is only slight differences we have. Let us check the slight differences. So Six Sigma started in 1981 at company name called Motorola. So TQM, Total Quality Management, started around 1950s, introduced by Foreign Boom in 1951. So Six Sigma focus on reduce and eliminate defects for the better customer results. TQM focusing on maintaining and improving existing quality standards. Very clear. So TQM only focusing on improving existing quality standards. They're not creating new things. But when it comes to Six Sigma, they are reducing, they're giving eliminate the defects as well as providing a better customer satisfaction. Next, so data driven and use certified professionals like black belt champions, executives, etc. In a company wide quality culture does not require a certification. So every person they can engage with the quality team, they can do that is called TQM. But only certifieds can do the Six Sigma. Next, complex and structured process needed trained Six Sigma experts. For implementation is not that much of easy. Why? Because professionals is required. So simpler to apply can done by the all employees. I already told done by all employees as a part of routine. Next, more accurate, effective, and focused on the measurable outcomes. Why? Because professionals are doing the work. So continuous improvement, but may show the slower or less measurable results. Next, strong emphasis on a customer feedback for a process improvement. So why? Because they're providing a quality work. So customer feedback also they will get a good. So less focused on the customer data or feedback compared to Six Sigma. So next, future outlook. Seen as a more powerful and effective today competitive market may be considered as a less effective comparison to Six Sigma. So these are the differences we have between Six Sigma and TQM. Six Sigma and TQM. Next, so lean manufacturing is there. You can read this lean manufacturing. In a lean manufacturing, so the benefits are important, and this 5 S of lean also important. So these are the Japan words: Seri, Titon, Tiso, Sekestos, Titsushi. So these are the Japanese words we have. The meaning was short, set in order, shine, standardize, sustain. They asked one MCQ based on these words in last attempt. So next, benefits also you can check. Sir, one thing I will give a clarity. When you are writing a benefits, uh, quality cost will be reduced, time will be reduced, efficient. So the benefits is common. Apart from these three benefits, you have to write at least 4 or 5 in addition to that related concept. You will get a good marks, guys. That is a shortcut clue we have in theoretical point of view. So next important thing is statistical quality control. So the word statistical quality control means we can't check each and every product in detailingly in organization. Why? Because some organizations are producing 1 lakh units, some organizations are producing 2 lakh units. For a checking of every 1 unit is not practically works. That's why we are using statistical tools to random sampling check. For that random sampling check, you have to maintain a high probability of success, not low probability of success. That's why we are using statistical quality control in every organization. Let us check the points. In 1985, Mitchell E. Porter wrote a book that changed how businesses think. He said that succeed in the long term, companies need a sustainable competitive advantage, something that help them stay ahead of others. So not a routine type, you have to like a different person compared to other product producers. To do this, a company must follow strategies that match with its mission and vision with the help of statistical quality control. Now see, Porter suggested three main strategies. You have to portray you as a different compared to others. First, cost leadership, differentiation, focus. If you have these 3 points, you can differ from another producers. Now let us check what is quality. So quality means making a product or a service that meets certain standards, satisfying customer needs at the time of purchase and continue to perform well while being used. So the word quality means creating making a product with standard quality, give a satisfaction to customer, and it need to fulfill the customer need. That is called quality. Next, benefits of the focusing on quality. If you focus on the quality, automatically customer base will be increased, your market share will be increased, your cost, sometimes your cost will be increased, profitability will be increased. Even the cost increases, sometimes profitability increase more than the cost. So that are the advantages we have if you maintaining quality. A simple limit customer expectation. Next, basic elements of quality. So by David Gervin in 1987. This year's also not that much of important, but focus on that also. So basic elements in quality. First, performance, features, reliability, conformance, durability, serviceability, aesthetics, and reputation. So you can listen in YouTube any broadcasters relating to businessman. These words they're repeatedly using. Reliability and durability. So reliability and durability. So when it comes to performance element, how well the product works, that is the know the with the help of performance. When it comes to features, extra functions or options it's offer compared to other persons. Reliability, how often it's breakdown and over a time, how long it survive. Next, conference conference, how well it meet the original design or standards. Durability, how long it lasts before needing the replacement. Serviceability, how easy and fast it's a repair. Aesthetics, how it looks, feels, sounds, and appearance. Reputation, the company history of making a good product. So these are the basic elements of quality. Okay, next. So you can read this also important. Benefits of statistical quality control. Yeah. So next I'm come up with a there is a no problems relating to X bar chart, guys, but there is a problems is relating to P chart, C chart. In statistical quality control, we have a problematic portion, P chart concept, C chart concept, P chart and C chart. When it comes to P chart, the proportion of defective items, that is nothing but non-conforming units. So proportion of defective items, the calculation of proportion of defective. So the proportion of defective items calculation, we are using P charts. Okay. When it comes to C charts, the number of defects or non-conformities in a sample or unit calculation, we are using C chart. Here also in a sample. So we are taking a sample, and that sample, if you are focusing on proportion of defective calculation, that is called P charts. In a So when it comes to C chart, the number of defectives or non-conformities in a sample or in a unit is called C chart. So when it comes to calculation part, total defectives divided by total sample size. Total defectives divided by total sample size. After calculation of P bar, you have to calculate upper control limit, that is nothing but P bar plus 3 into square root of P bar 1 minus P bar divided by N, and also calculate lower control limit P bar minus 3 square root of P bar 1 minus P bar divided by N. The word P bar means total defective divided by total sample size. The word N represents number of samples, average number of samples. Okay. When it comes to C chart calculation, so C bar equals to total defects divided by number of observations. Total defects divided by number of observation. Here also we have to calculate upper control limit C bar plus 3 square root of C bar. Lower control limit C bar minus 3 root of C bar. Now when it comes to calculation, they provided so graph is like this. This is called control limit, upper control limit, lower control limit. So if you're drawing a graph like this, so it is within the control limit, the process and production is done good. For example, if it touches the upper control limit, production is not under control. If it touches if it touches lower control limit also, production is not our control. So it is within the only control limit only. Our defects are less, they are our control limit. If it is touches the upper control limit, production is not our control, there is a more defectives. If it is less also same, there is a more defectives, production is not our control. Hope you guys clear. Let us calculate the problems for this P charts and C charts. You can observe. So this is the P chart. First you have to calculate P bar. So how to calculate P bar? So total defectives divided by total sample size. So sample size is 10. 10 sample size of 100. Now the P bar equals to fraction of non-conformities. So sum of non-defectives. These are the defectives. How means 5 divided by 100, 5 divided by 100. Why? Because population is 100, sample is 100 now. If you divide with 100, you will get a fraction of non-conformities. The total sum of defectives divided by sample size is 10. So P bar value is 0.038. Now we have to calculate upper control limit. So 0.38 plus 3 bar square root of P bar 1 minus P bar divided by sample size 100. So if you calculate, you will get an answer 0.095. So upper control limit is 0.095. When it comes to lower control limit, it is minus 0.02. There is a no minus 0.02 in the calculation part. That's why you have to consider 0. So the answer is, if within the 0.038 your production and defectives are in your control. If it is crosses the upper control limit, that is 0.095, out of the control. If it touches the 0 also, out of the control. Next, when it comes to C bar, so number of complaints divided by number of samples. So the number of samples equals to 10. Number of complaints is equal to 22. 22 divided by 10. 2.2 is the C bar. Upper control limit. C bar plus square root of 3 plus 3 into square root of C bar. 6.65. Lower control limit. C bar minus 3 square root of C bar. So answer minus, there is a no minus, 0. So within the control limit, within the control limit, no issue. If it is a control limit crosses, out of the control. If a control limit crosses to lower also, out of the control. Workbook question number 14, 15 is new concept. Please explain. So one concept I will explain, Harish. Next one is you can do. Why? Because of both are same concept. Yeah. Okay, Sujit. When it come to, there is a concept name called quality cost categories. Quality cost. So quality costs are classified into two types: quality control cost, quality failure cost. Under quality control cost, prevention cost and appraisal cost is there, and quality failure cost, internal failure cost, external failure cost. Let us check here. Prevention cost means incurred for a prevention of poor quality. So quality planning cost is nothing but a prevention cost. Example are quality training also. When it comes to appraisal cost, incurred for uncovering defects. What are the cost you are used for uncovering defects? That all are covered under appraisal cost. So examples are quality inspection, product testing. When it comes to internal failure cost, are associated with the discovering a poor product and quality before the product reaches to the customer site. So before reaches to the customer site, what are the costs you are used within your company or within your plant? That is called internal failure cost. When it comes to external failure cost, are associated with the quality problem that occur at the customer site. If any quality misuse happen at a customer side, that is called external failure cost. Example, warranties, rework cost, scrap. So here quality inspection, product testing, and quality planning and quality training. So if you know the cost definition of this prevention cost and appraisal cost and internal failure cost and external failure cost, you can easily answer that problem number 14 and 15. Now when it comes to problem number 14 and 15, go with the problem number 14. So NCCA Limited implemented quality improvement program and had a following results. Sale is there, scrap is there, rework is there, production inspection is there, product warranty is there, quality training is there, material inspection is there. These all are cost only, but you have to classify prevention, appraisal, internal failure, external failure. That is the only thing. You already know what are the list we have in prevention cost, quality planning cost and quality training. So what are the list of appraisal cost? Quality inspection, product testing. Internal failure cost means rework cost, scrap. External failure cost means warranties. If you know this, you can easily answer. Let's check here. Prevention cost. When it comes to prevention cost, only quality testing and quality training. So there is a no quality testing, only quality training is there. So that is the prevention cost. Next, you have to calculate with the percentage of sales. So 37.5, 75. When it comes to percentage, 37.5 divided by 3000 into 100, 1.25%. When it comes to 2022, 75 divided by sales, 200, 2.5%. So that is the prevention and percentage of its sales. Determine the cost of appraisal. So what are the cost of appraisal? Production inspection and material inspection, all inspection related costs are relating to appraisal cost. Yes, there is a product inspection is there and a material inspection is there. So 100 divided and its percentages to sales. First write down the cost 140. So whenever calculating, there is a two individual things now. I am calculating total point of view. That's why total appraisal cost 140. So 140 divided by sales 3000 into 100, 4.67%. For 2020, 150 is the 120 plus 30, 150 divided by 3000 sales into 100, 5%. So after appraisal, internal failure cost within our site, within our company. So within our site, scrap and rework. 300 plus 250, 550, 150 plus 200, 350. 550, 350. 550 divided by sales 3000 into 100. 18.33%. 350 divided by 3000 into 100. 11.67%. External failure cost. The external failure cost at a customer side. Warranty. Production warranty. 150, 75. So 150 divided by sales, 75 divided by sales. The total quality cost is you can add all values 87.5. When it comes to sales point of view, total cost 87.5 divided by 3000 into 100, 29.25%. Next, 150, 350, 75, 75, 650. 650 divided by total sales 3000 into 100, you will get a 21.67%. So this is the KCA, Case B, KC, Case D. So cost reduction, quality cost last year 29.25%, this year 21.67%. So this year we are incurred less expenses for cost reduction or cost control. So increase in profit as a result of cost reduction. Yes. So how much we reduced? 29.25 minus 21.67. So 7.58% of cost we reduces means it automatically cost reduction means profit only now. The reduction is 7.58. That is nothing but profit 7.85% into sales 3000. 227.4 lakh or crore rupees were saved. So illustration number 16 is not required, Sujit. You can skip that illustration. I added only for regular class. It's not helpful for exam point of view. Okay. So I think time is over. Hope you guys you learned well with this revision session. So this is the exam point of view important revision. Okay. So for understanding purpose, you can go with the TPM, TQM overview. Okay, guys. So yes, Sujit, you're perfect about this revision. You easily crack 14 marks from this chapter. No, Harish. All sources problems I kept in my book only. You don't check other sources. All sources I included. Old workbook, question papers, MTPs, old material, new material, all sources are included in my material only. Okay, Karthik. Already bro notes. I will share this notes in my Telegram. Already is there in my Telegram chapter 2 notes. Go and check in Telegram. Harish, comparing to yesterday, today, voice is clear. Huh? You follow this live, not only 45 to 50. Trust me, you can easily crack more than 60. I assure. You can easily crack more than 6 if you follow daily this revision classes. Subject to condition, if already uh, listened anywhere, it is in a first time, I can't assure. If you are a first time listener, revision is not good for you. You can purchase our EO classes. That EO classes I explained all problems. In this revision I explain only important problems. The person who already listened these classes, it's a very helpful. No, Sujit. I listened again. So due to some technical glitch that happens. No, it's not a complaint, it's a suggestion. I agree. Then okay guys, we will meet tomorrow. Then off. Thank you. Bye.